The Simple Path to Wealth by J.L. Collins. Introduction. Welcome to the journey of financial freedom through The Simple Path to Wealth by J.L. Collins. Imagine a life where money serves you rather than the other way around. A life of choice, not constraint. That's the essence of this book. J.L. Collins, an experienced financial guru, created this straightforward guide after noticing how often people are overwhelmed by investing and personal finance. Originally crafted as a series of letters to his daughter, the book is now an invaluable resource for anyone seeking clarity and simplicity in managing money. Here's the deal. This is a summary, not a substitute. It condenses key ideas from the book into digestible bites to get you started on your financial journey. If you want deeper insights, practical nuances, and the full experience, grab the book. You won't regret it. Now, let's walk the simple path to wealth together. Chapter 1. The Importance of FU Money. You've likely heard the term financial independence, but J.L. Collins introduces you to something even better: FU money. This is the money that gives you freedom, not to be rude, but to say no to things that don't align with your values. Think of it as a buffer against life's curveballs. Whether it's quitting a toxic job, taking a break to travel, or simply buying back your time, FU money is your ticket to freedom. Collins simplifies this. You don't need to win the lottery. All you need is a disciplined approach to saving and investing. By living below your means, building an emergency fund, and understanding the power of compounding, you can slowly but surely accumulate wealth. For example, consider saving 50% of your income and investing it in a diversified portfolio. Over time, even modest investments grow exponentially. Chapter 2. Avoid debt like the plague. Here's the hard truth. Debt is the ultimate wealth destroyer. Collins doesn't sugarcoat it. You need to avoid bad debt like credit card balances or high-interest loans. But what if you're already in debt? Start with the snowball or avalanche method. Picture this. You focus on paying off the smallest debt first, snowball, to build momentum, or you tackle the one with the highest interest rate, avalanche, to minimize costs. The choice is yours, but the key is discipline. As Collins puts it, every dollar not spent on interest is a dollar toward your freedom. Chapter 3. Spend less than you earn. This may sound obvious, but Collins emphasizes it because it's the foundation of wealth building. Spending less than you earn gives you the surplus needed for investing. Think about your budget. Do you prioritize needs over wants? Are you mindful of lifestyle inflation, where rising income leads to higher spending? Let's say you earn $5,000 a month. If you save $1,000 of it consistently, you're setting the stage for compounding growth. The magic happens when your savings work for you instead of sitting idle. Chapter 4. The Power of Index Funds. Here's where the magic begins. Collins is a strong advocate for index funds, especially those tracking the S&P 500. Why? Because they're simple, cost-effective, and deliver reliable returns over the long term. He highlights that most actively managed funds fail to beat the market consistently, yet they charge higher fees. Imagine you invest in Vanguard's VTSAX, one of Collins's favorite index funds. Instead of chasing hot stocks, your money grows with the market. It's set and forget investing at its finest. Chapter 5. Stock Market Myths. The stock market can feel intimidating, right? Collins debunks myths that often scare people away. For instance, you don't need to time the market to succeed. Time in the market is what counts. The market will have ups and downs, but historically, it has always trended upward. Imagine this. During a market crash, most people panic and sell. But what if you stayed calm and even bought more? Collins explains that downturns are like sales. You're buying stocks at a discount. Over time, this patience pays off. Chapter 6. The Simple Portfolio. Collins believes in simplicity. His recommended portfolio? Primarily index funds. He suggests a mix of stocks and bonds based on your risk tolerance and age. A common guideline is to subtract your age from 100 to determine the percentage of stocks in your portfolio. For example, if you're 30, you might have 70% stocks and 30% bonds. Adjust this mix as you grow older and prioritize stability over aggressive growth. Chapter 7. The 4% Rule and Financial Independence. How much money do you need to retire? Collins introduces the 4% rule, which suggests you can withdraw 4% of your investment portfolio annually without running out of money. To calculate your financial independence number, multiply your annual expenses by 25. Let's say you need $40,000 a year to live. Multiply that by 25, and you'll need a portfolio worth $1 million. Achieving this number means you can live off your investments indefinitely, thanks to compounding and sustainable withdrawals. Chapter 8. Keep it simple, stay the course. Collins emphasizes that consistency trumps complexity. Avoid flashy investments or market trends. Stick to your plan. This chapter reinforces the importance of discipline, especially during market turbulence. Picture yourself on a roller coaster. The stock market will have highs and lows, but the ride smooths out if you stay seated and hold on. The key is trust. Trust in the long-term growth of the market and your strategy. Chapter 9. Teaching your kids about money. Financial literacy isn't just for you. It's a gift you can pass on to future generations. Collins provides practical advice on teaching kids about saving, spending, and investing. For example, encourage them to save a portion of their allowance or open a custodial investment account. Imagine your child investing $100 in an index fund at age 10. By age 60, with compounding, that small amount could grow to thousands. Starting early makes all the difference. Certainly. Let's extend the summary and include additional chapters based on key concepts and principles from The Simple Path to Wealth. While the book itself doesn't have exactly 20 chapters, I'll break down its ideas into 20 clear, engaging sections for your 30-minute voiceover script. Chapter 10. The Magic of Compounding. Imagine planting a tiny seed and watching it grow into a massive tree over time. That's compounding for you. The earlier you start investing, the more time your money has to grow. J.L. Collins describes compounding as earning interest on your interest, a phenomenon that works wonders over decades. For example, if you invest $10,000 at an annual return of 8%, it grows to over $100,000 in 30 years, even if you don't add another penny. The takeaway: start now, no matter how small the amount. Time is your best friend. Chapter 11. Why you don't need a financial advisor. Financial advisors can help, but Collins warns you to be cautious. Many charge high fees that eat into your returns or push you toward complex investments that don't serve your best interests. Instead, he encourages you to educate yourself. Think of it this way: by understanding basic principles, like index funds and the 4% rule, you can manage your money without needing a middleman. This not only saves you money, but also gives you full control of your financial journey. Chapter 12. The Importance of Emergency Funds. Before diving headfirst into investing, Collins stresses the need for an emergency fund. This is your financial safety net, covering unexpected expenses like medical bills or car repairs. Ideally, aim for 3 to 6 months of living expenses in a high-yield savings account. Imagine losing your job unexpectedly. An emergency fund ensures you don't have to rely on credit cards or dip into your investments, keeping your wealth-building plan on track. Chapter 13. The Case for Living Simply. What if the key to happiness isn't more money but fewer desires? Collins argues that living simply, focusing on what truly matters, leads to both financial and emotional freedom. By avoiding the trap of consumerism, you can save more and stress less. Picture a life where you value experiences over possessions. Instead of upgrading your car or chasing the latest gadget, you're investing in your future. This mindset shift is a game changer. Chapter 14. The stock market is not the economy. Here's a crucial distinction. The stock market and the economy aren't the same. While the economy may face recessions or unemployment, the stock market often reflects investor sentiment and future expectations. Collins explains this to help you stay calm during market downturns. Remember, investing is a long-term game. Don't let short-term economic news derail your strategy. Chapter 15. Why you can't predict the market. Timing the market is a losing game. Collins stresses that even the smartest investors can't consistently predict when to buy or sell. Instead, he advises sticking to regular, automatic investments, what's known as dollar-cost averaging. Imagine investing $500 every month, regardless of market conditions. Sometimes you'll buy at a high price, sometimes at a low, but over time, this approach averages out and minimizes risk. Chapter 16. Inflation and Why It Matters. Inflation is the silent thief that erodes your money's value over time. Collins emphasizes that investing in stocks isn't just about growing your wealth, it's about outpacing inflation. For example, if inflation averages 3% per year, keeping your money in a low-interest savings account means you're losing purchasing power. Investing in the market, with its historically higher returns, helps you stay ahead. Chapter 17. The Danger of Overcomplicating. Many people think investing needs to be complicated. Collins disagrees. Complexity often leads to mistakes, higher fees, and stress. Instead, he champions simplicity, index funds, automatic contributions, and a long-term mindset. Picture this. Instead of juggling dozens of stocks or funds, you have 1 or 2 well-chosen index funds. This streamlined approach saves time and mental energy, letting you focus on what truly matters in life. Chapter 18. The Role of Bonds. While stocks drive growth, bonds provide stability. Collins explains that bonds are less volatile than stocks, making them a valuable addition to your portfolio as you age or approach financial independence. For example, in a market downturn, bonds tend to hold their value better. cushioning your losses. Striking the right balance between stocks and bonds depends on your age, goals, and risk tolerance. Chapter 19. Overcoming Fear and Greed. Two emotions dominate investing: fear and greed. Fear makes you sell during market crashes, while greed tempts you to chase speculative gains. Collins warns against both, urging you to stick to your plan. Imagine the market drops 20% overnight. Instead of panicking, you see it as a buying opportunity. Or during a bubble, when everyone's chasing the latest hot stock, you stay disciplined, knowing bubbles eventually burst. Chapter 20. The Path to Financial Freedom. The final step is envisioning your goal: financial independence. Collins encourages you to reflect on what freedom means to you, whether it's retiring early, traveling the world, or spending more time with family. By following the simple path, living below your means, avoiding debt, and investing consistently, you can make this vision a reality. The beauty of financial independence isn't just the money, it's the freedom to design a life you love. Conclusion. There you have it, a 20-chapter guide to building wealth, inspired by J.L. Collins's The Simple Path to Wealth. It's not about overnight success, but steady progress. Start small, stay consistent, and watch your money grow over time. Remember, this summary is just the beginning. For a deeper dive into these principles, grab the book and start your journey today. Your simple path to wealth is waiting. Let me know if you'd like the script formatted or refined further for your voiceover project.